Bitcoin's on sale. Bitcoin is definitely on sale. It's not bad. Hey guys, what's happening? Nice to see you guys. What else is on sale at the moment? Let's have a look. Doge, 10 cents, yes. Hasn't been this cheap in a while, huh? Yeah, very good. Let me just turn the music down a little bit. That's a bit better. Now I can hear myself talk. XRP. Let's check it out. Probably won't talk much this stream. Just thought I'd chill out and check the charts out with you guys. Nothing too crazy. Nothing too extreme. Ooh, yeah, XRP. 50 cents. Beautiful. I'd love to see Bitcoin go sub 30k. That'd be so good. But it's still got a lot of support, you know, around this area here. So see what we got. The MACD's coming down beautifully. There will be a nice recovery here at some stage, you know. Might not be immediately. There could be some more bleeding to come. There's some more, you know, sell-off, but for now, yeah, I guess we'll have to see how this $30,000 level holds. It's been a really good point of support in the past. On the macro view here, there's it's been, you know, it's been touched 4 major times with decent recovery, especially this one here. Nice bounce off that. Who remembers what this was? That was Elon Musk. Oh, no, the B Word conference? B Word, yeah. I think Elon Musk was speaking at that, and Jack Dorsey. So there was this beautiful recovery of that after, you know, this whole section here, which felt like forever. Yeah, after, you know, all of the excitement we had after COVID, you know, all of that. Something like this will happen again, like where we get this huge bull rally. Like, that is a bull market right there. This here, like all of this sort of slope here, that could be, you know, you could argue that that's the start of a bear market, but you know, after every all-time high with Bitcoin, like this one here, there's always, you know, a lot of just stagnation and flat. Like, you still get a bit of rallying here and there, but nothing crazy. So I think that's pretty fair to say that that's what's sort of happening here. to get this second all-time high after this one, that was pretty cool. Like to get that after we were given this one here, and not too long later we get. I mean, it's practically a double top, but yeah, technically still an all-time high, a new one. Let's see what the entire crypto market's doing. Let me just go to my list here. I think it's under total. Here we go. Oh yeah, okay. So we've dropped under 1.5 trillion total market cap. And yeah, I mean, what do I think about XRP? I still think it's completely viable and fine. It's just it's reacting to the rest of the crypto market dipping. Like this is all just a big sell-off. I think the regular, like the standard markets, are also suffering drawdown as well at the moment. Let me see if I can find like the Dow Jones. Yeah, I mean, it's hit, the Dow Jones has hit an all-time high up here, and now it's, you know, seeing a bit of a sell-off, which is healthy, it's normal, there's no problem with that. The S&P 500, same thing. This is a daily chart. Yeah, so crypto is just reacting to what's happening around the world. You know, it's all markets are being affected right now. I guess some people will be hedging in assets that are considered more stable, like, you know, well, at the moment, a low risk stable asset would be cash, the dollar, which, you know, is a crappy asset if you ask me, but still, at least it doesn't go crazy fluctuations like this, like crypto does. So it's completely fine to ride out the storm and while sitting in, you know, dollars. Or I wonder, let's have a look. Gold. Yeah, even the gold price has taken a bit of a hit too. Gold used to be the thing that people would jump into when the market hit any kind of turbulence or crashing or whatever. People would hedge into gold to ride out the storm, so to speak. So, but yeah, I don't know if that trend is still a thing these days. Precious metals. Well, yeah, I mean, the S&P 500's down 3.2%, but gold's only down 1.5%. So maybe, yeah, maybe it is holding value a bit better than the rest of the stock market. The DJI, yeah, the Dow Jones Index. So Bitcoin, I mean, if you ask me, I think this is great news. This means we can accumulate at better prices. Like, so much better to accumulate when the market's dipping, right? Rather than trying to accumulate it while Bitcoin's just holding value, like at a fairly high price, you could say. I mean, price is just relative to what time you're looking at the market, like what time you're looking at the history of Bitcoin and crypto. But yeah, I don't tend to look at price so much, but just looking in the past year we've had, like, it's good to see that the prices are coming at least back down to around 30K. Are we ever going to fill the gap? So the gap being previous all-time high and then our current support at 30,000. So that space, this dead space here between those two lines, that is a bit of a gap that hasn't been like filled yet, but price hasn't re-entered that zone yet. So it'd be cool to see if the price maybe dips down to, you know, low 20Ks and maybe does a bit of action like that, that'd be awesome. Wouldn't that be sweet? Good buying opportunities there. But yeah, there's not too much more to say. It's just more part of the well, I guess you could say it is a bear market. It's definitely not a bull market right now. I don't think. We're getting consistent support though at 30k, so this is a pretty monumental time for this year so far, I think. Like it's crypto hasn't well, Bitcoin hasn't been this cheap all year. It's been, holding above 33k. But yeah, I mean, a lot of what I can say here is stuff you probably already realize and know. So there's not too much more. There's no secrets about this. It's all pretty obvious, I suppose. It's just taken a hit because of the global markets. The regular stock market. So that's the weekly chart for the Dow Jones, and check out the S&P as well. Weekly, similar. Yeah, it's been pretty turbulent since the Russia-Ukraine crisis. But, in crisis comes opportunity for trading and investing. Just like we saw with COVID. See that? That was a crisis. That was a global crisis. So, but look at the recovery off the back of that. Markets always recover. At least in every point in history, we've seen markets pick back up. This was the GFC, 2008. Massive crash, felt like the world was ending financially, and then boom, recovery. Money has to go somewhere. It doesn't just disappear altogether. It leaves the markets and goes elsewhere, like probably into, reserves or cash or whatever. But it eventually, there's a point that it bounces, it finds a floor, it recovers, and then all the money comes seeping back in, like quite dramatically. So I would say that is likely to happen with crypto, and it has done in the past. Like, let me find a Bitcoin chart that has a lot more history to it. So let me see. BTC. Just trying to remember my old lists here. They're not Binance. Bitstamp, yeah, Bitstamp's good. I might delete the drawings on here, or just the fib retracement. Okay, so Bitstamp, I think that's got a pretty decent history to it. If we go weekly chart, back in 2012, yeah, you can see there's been huge rallies and then pretty hefty crashes as well. I'll turn logarithmic. Oh, actually, we need log on at this scale, zoomed out. So yeah, it's if you look on the overall scale of Bitcoin's price, we are still very, very elevated up here. Like, I'm pretty sure there's solid support at 20,000. Like, if we were to break down through 30k, you would expect some kind of reaction at 20, even if it is just like temporary. But yeah, every time crypto or any market takes a hit like that, there is a huge opportunity for buying, which the smart money get in on these massive dramatic dips. So it wouldn't surprise me if in the next couple of weeks or even days that there is some kind of bounce. Like, maybe we'll see something like this. And then, yeah, perhaps it will, fall back into the rhythm of going downhill. But for the most part, yeah, there should be, I wouldn't be surprised if there was some reaction off 30K. It seems to have already done it. Yeah, here we go. If we zoom in, this is the hourly chart, and yeah, the last 3 hours have been kind of finding the floor at 30,500 ish. I just heard someone drop into the Discord channel. No one has. Oh, it's all good. So I'm sitting in Discord if anyone feels up to coming in and having a chat. I haven't yet sent the message out that I've been streaming either, so maybe I'll do that. Let me grab the link to the stream. How do I do that again? Oh, here we go. I'll find it. Crypto Down Under. Link. Type up a little message. Beamed it out. Maybe I'll tweet that as well. Elon Musk would be proud. Just get onto Twitter. 1 second. Social media, Twitter.
Man, there's some sexy Rick voice for you right there.
Oh, what's happening? Consume. How are you?
Doing well, man. Doing well. How about yourself?
It's good. Yeah, not bad. Not bad. Just thought I'd jump on and talk about this massive drop that happened. I suppose it's been happening for the last week. Like, it's been the last 4 or 5 days. It's just been sliding down. But let me just tweet this out here.
In the Americas, we call this an S show.
All right. Of what? An S show?
Yeah, that's the YouTube edited
version. Right. Okay, yeah. I got you. A shit show. Yeah, it is a shit show. All right. So it's tweeted, it's Discorded, it's everything. All the people should hear that or see that are subscribed and with the notifications. All right. What else is there to cover? We've talked about Doge. I reckon it'd be pretty cool to see Doge break back down below this previous high here, the 9-cent resistance back in late January last year, early February, that double top that we had with Doge at 9 cents. Did you get in on Doge much when that was happening last year?
Yeah, I've been in since 6 and then 14.
Oh, yeah. Oh, that's awesome. I'm just going to fix my levels here because I think Discord might be like extremely loud. And let's see. Maybe I'll make it like 75%. We'll see if that does anything. Yeah. What's happening? DC Woodworking. Good to see you, man. Yeah, buy the dip. Save your chips, buy the dips. Yeah, Doge on sale. It was sad to see that 420 didn't do much. Like last year it was crazy, but this year, not a hell of a lot. But yeah, if you're dollar cost averaging, like this is all just good news to the people that are dollar cost averaging, accumulating on its way down. Because eventually it's going to level out. It'll find a floor, as it has done in all of Bitcoin's history. And markets in general, like, when there's a dip, there's a rip, and vice versa. Markets go down, markets go up. But they usually go up more than they go down. over time. Like you can see that, especially with Bitcoin and like the S&P 500, the Dow Jones, you name it. Like, but individual assets and stocks, that's not the same case. I just mean markets as a whole. Like this is a pretty decent history on the S&P. Back to the early 90s. Yeah, like over time you can see it is an up slope. Like it's an upward direction. So these momentary lapses or dips are only, they come and go. Like they'll dip. Awesome opportunity. Like look at all the buying opportunities from all the previous dips in the S&P 500. Like so this dip here, the bottom there, awesome opportunity to buy because look what happened after. Same again here, awesome dip, buying opportunity, huge recovery off that one. That was the GFC. If I go to I know I've spoken about this before, but if I go to the Dow Jones, this has a really long history. This goes back into the 1800s, the late 1800s, I think. This chart. Might have to go to the monthly chart. There we go. So, yeah. 1896 is the earliest. May 1896 is the earliest sort of stats for the Dow Jones. I don't know the full history about the Dow Jones, like when it was officially started up. Maybe this was it. May 1896. Anyway, you can see that was the Great Depression in the 20s and into, the 30s. Was it the late 20s? Let me check. Yeah. Yeah, the early 30s. Okay. Yeah. So 1929. So, I mean, World War One, what was that? 16 or 15 or something like that. My history's not great.
Yeah, 14 through 18.
14 through 18, yeah. Okay, let's check that out. If I go back to the 1920s or the teens, here we go. Get up to display by year here. Here we go. Oh, that's good enough. So 14, draw a box around that because I'd be curious to see how the markets reacted over the war. Let's just say January 2014 to 18. So that's the war there. Like that's pretty, you can see how volatile the market was at that time. Like huge up, huge dip. I mean, wars are like big money making things as well, like as destructive and crazy, and we don't want them. But from a financial, like a trading and investing perspective, they create crazy volatility, which is...
I agree with you, Rick, but I would say that it's changed since like the Gulf War. It hasn't had the same amount of impact as it did, say, in back in the World War One, or even at World War Two, or like the Vietnam. All the conflicts the United States has been in, it's kind of hard to tell. We've only not been in war for like 20 years out of the existence of our country.
Yeah, that's it. I mean, every war's completely different. And, I guess the market reaction to any conflicts is just like a symptom of war and conflict. Like there's a lot of spending that happens during a war, like defense budget, like a lot of, it creates a lot of industry, like, well, at least the world wars did. There was a lot of like tank factories and munitions factories all bustling, and a lot of trade getting halted and stopped and started and all that kind of stuff. So yeah, it creates a lot of disruption in the markets and uncertainty. So what the hell was this? Was the Great Depression. Yeah, that massive dip there. That's crazy. So World War II, let me get the dates for that. 39 to 45. Okay. September 39 to September 45. Oh yeah, look at that. The breakout of World War II, there was like a... So this is where it started. And then it ended in 45 in September. Like early September, yeah, about there. So that's World War II. War One. 14 to 18, yeah. July to November. Okay. It's like 28th of July. Out there. And then ended on the 11th of November, 1918. Let's just say about that. Lock. So the Great Depression sort of happened smack bang in the middle of World War I and World War II. But damn, did we recover like off the back of that. If I go back out to the monthly chart, markets have just been going up and up. The baby boom after World War II. What a time to be alive. And what a time to like raise a family and build a business or buy a house or, you know, build a life. Would have been amazing through the 60s and 70s. And even the 80s. I mean, even now, like through the 90s, like we've seen dips and all that, but just give it time and like, unless human civilization goes backwards, I think we're going to stay on this kind of growth trajectory. But, you know, past performance is not always a reliable indicator of future outcomes, but yeah, it's a decent, it's all we've got really. It's to look to see what might happen. So anyway, to tie this all back to crypto, crypto behaves the same way as any other market. There's it's driven by human activity. So buying and selling, human emotion, as we all know. So fear and greed. And I guess you could say crypto is just amplified. It's so volatile. Like the volatility is like amplified version of the stock market. So, you know, that's why a lot of people sort of steer away from crypto, because they're not used to that level of volatility and uncertainty. But if you're used to just the rhythm of how the market moves with crypto, and like you realize that, okay, we're going into some kind of potential bear market or reaccumulation phase, then there'll be a big opportunity to, you know, accumulate and then profit off that when you give it time for the recovery. So happened through here and even this dip here, all of that. Like this was a very choppy part of Bitcoin's history here. But yeah, for the most part, you get those bull runs that happen every now and then. And that's what we're all sort of hanging out for. But yeah, I would be very surprised if crypto as a whole bombed out and just went down and did not recover ever like that. I don't see that happening. Too much of the smart money have exploited crypto for the fact that it moves so fast and dips heavy and provides buying opportunities and bounces back so they can make money. So I don't think that they would just leave it alone. It's too easy for them to make money this way. So I'm pretty sure it's here to stay. And until, you know, the only thing that I can see it killing it is regulation and governments like banning it, which is, yeah, they've tried to do that in some countries. But I think it's been here for well over 10 years, So I don't think it's going anywhere. So Shadow 777, thank you for the super chat. Thank you for coming back. Well, thank you for coming back. Appreciate your support there with the super chat. And good to see you guys. I can see you commenting here. Hi Rick, welcome back. Appreciate it. And I know I haven't streamed in quite a while. I've been sort of off the burner, but you know, the market has been not as thrilling as it has been in the last year. There hasn't been a hell of a lot to talk about. There's still trading. You can trade any day if you want, but yeah, I'm just waiting for these conditions to return, these really nice bull rallies. There was a bit of one, you know, there was a couple through here, three decent rallies through there, but yeah, I think something decent is going to happen off the back of this drop. I don't know when. It's hard to say when, but just judging by the way Bitcoin's behaved off a drop, like there will be a recovery of some sort, I think. If it drops further, that's only, you know, better news for the people accumulating, so don't panic too much. So, yeah, I might just turn the music up a little and flick through the charts. And wow, we've got 49 people watching. Thanks for showing up, guys. Remember to hit the like button. See if we can get more people tuning in. Close this out. What's up, Cheetos? Thank you, Sky Blue. On a day like today, it's comforting to hear Rick's calm voice. I'll tell you what, investing in crypto is a lot easier. Like, playing the investing game is a lot easier than trying to be a trader and play the trading game. As I've said many times before, trading's a bit more advanced, I guess you could say. You need to be in control of your emotions when you're trading. Whereas with investing, you're just basically letting strategy take the wheel, you know? I mean, with investing, like you don't have to really tie much emotion to it at all. You can just say, okay, I just want to accumulate when the market's doing this. So you just, like, for example, you could set up, okay, I want to buy $100 worth of Bitcoin every paycheck or whatever, and that's your accumulation. That's your dollar cost averaging. And then, you know, when the dip in the so-called recession of crypto is over, you will have accumulated a nice average of Bitcoin or whatever you're buying, ready for the next bull rally, which, you know, will see your accumulated holdings raise in price. So it's just a patience game with investing. It takes a while, but yeah, totally different to trading. I'm gonna go back to like some of my longer lists. I think it might be this one here, and just see if anything is actually having an okay day. Oh, there you go. Fourth, ample fourth, waves, bond. That's so dramatic. 26% bounce in like a matter of hours. That's crazy. Fourth, wow. This is let me go to the daily chart. Yeah, wow. The last couple of days have been crazy. Fourth, 81% up. That thing's just been bleeding for days, for a long time. Interesting. All right. Yeah, that's it. James Craig, one that always preached DCA for the long term. Yeah, definitely. It's a good strategy to take out all the doubt. You know, I don't think Amp's dead. This fourth thing, is that ample fourth? I can't even remember. Let me check out coin market cap. Where is it? Turn it on night mode so I don't blind you guys. Amp. Looks like it's been struggling. Let me see if I can add the symbol in here. Oh, I've already got it in here. I just have to... Yeah, that's taken a hit. 21% dip today. That doesn't look great. That chart's very unhealthy. It's just been falling ever since it came out. And just today it looks like people have given up on it. But you never know. Like if you just have to do the research, like is the project real? Like is there a team behind it working on it, developing it? I don't know what Amp's all about, but let's just see. What is Amp? Amp is described as the new digital collateral token, offering instant verifiable assurances for any kind of value transfer. Using AMP, networks like Flexer can quickly and irreversibly secure transactions for a wide variety of asset-related use cases. Collateral token, interesting. Who knows why it hasn't done well, but yeah. You never know, there might be a huge bounce around the corner. Yeah, it's just a sea of red today, mostly. We go back to, oh, is CoinMarketCap having a birthday or something? Oh, okay, that was on the 2nd of May. 9th birthday. Wow, it's been around a while. I think CoinMarketCap might be owned by Bitcoin. Don't quote me on that, but I think it might. Someone owns it. CoinMarketCap. Like some kind of exchange, I think. At least the last time I checked. Alright, I'll be right back. I'll let the music keep playing in the background there for you. All right, guys. Thanks for tuning in. I might do another stream in about a week's time, week or so. But yeah, hang in there. This is only a temporary thing, I think. Well, that's a guess. We'll just have to see how it goes. Let's see how $30,000 holds, if it's going to hold a support, or whether it's going to bust through that even. But yeah, I'll see you on the next one. Thanks for tuning in. Bye.